So this is our weekly review video for week 3. This is the third week we are going to be doing this video here, and the time covered is the 10th to the 16th of March here. So it's not quite those dates, but that's just the week. So we can see here it was a losing week. We had our gross profits, gross loss, which were pretty closely followed there. Commissions, quite a bit of commissions there, quite a bit of churn, negative profit factor, which means strategy used was a losing one. High winning percentage, which means nothing because it's in this context because we've lost. Average trade being a loser, average winner smaller than average loser, largest win being the largest loss. That's positive to see. 42 trades per day. Wow, that's quite a bit. We'll look over on the analysis page, and as we can see, really choppy equity curve here. You can see we started off with went bullish, negative, slightly back to break even, went negative, built the account up a fair bit here to the peak of around 13. As you can see, we drew all the way down to -4 right there, and slowly built our way back from the lows to where we ended the week. So if we have a look at the half an hour per trade, and we can see that I believe this would be see, this here isn't quite 11. It's not quite 11 a.m. Eastern Standard Time because of the time differences due to daylight savings. So this would actually be 12, I believe. It should be about 12. Yeah, it would be 12. So that would have been 12 in the afternoon Eastern Standard Time. That was at least a profitable period for me. Smaller losses in and around that. We can see here at 11 hour of the day. Okay, half hour of the day. There we go. This better sums it up. So again, that lunchtime period being the most difficult. Now this would have been about it's not quite 11 Eastern Standard Time due to daylight savings. It's in fact 12. You can see we lost 11:30 there, and we lost at 12:30 up until about 1. Came back strongly into the final 2 hours of the market there, so that would have been like 2 p.m. There in towards the close of the market. So during our lunchtime we had our most significant drawdown. Had a good period here between 10 and 10:30 a.m. Eastern Standard Time. So that lunchtime is proving itself difficult. If we have a look at the trades there, you can see had some big drawdowns. We also had some big wins. Now from this, from the trades, what I decided to do, the week's already started, we already 2 days in. what I did was I moved away from the strategy I was using there. I started to think about using the moving average cross, and moved a little bit away. And what I decided to do was I started to think, when it came down to it, that I need to be trading during a time period where I have better edge in the market. Now, a better edge in the market was what I was thinking was was more likely to be some follow through, probably less chop. And I thought, well, if I keep coming to the market around the 11 to 12 period, I'm coming to the market when there's a fair bit of chop in the market, where the market is would have had a big move in the morning, and the market is starting to go into that consolidation period. And here I am looking for trends and continuations where the market is in a state of rest. So for this coming week, what I decided to do was have a change in strategy. There was a strategy I was looking at in the background, which is a CF10R, and that I decided to deploy that based on what I was seeing on the charts from the looking back a couple of days, couple of weeks, was that it was most effective within the first hour of the market opening. Now, I'm not going to always be here due to scheduling issues to be here for the first hour, but when I can be, I'm looking to use that strategy. And so far this week, it's been 2 days and the end of last week, and it has proven itself to be show some positive results. We did see it, I believe it was one of the primary reasons we did have the pullback in our equity curve from being down. So if we go to trades and we go to the cumulative net, so after our peak drawdown, I suppose it was responsible for some of the bullish buy side momentum, well, the pullback we've seen out of this drawdown. So it has played a role there. So we've decided to change that just to bring that strategy in, focusing in and around the open, not exactly the open. I'd probably say about 10 minutes after the open, but the whole purpose of that was to get the volatility around the open and just get in, get out with reasonable take profits. And so far this week has resulted in shorter days. Now, I wanted to pursue the use of the moving average cross system, but would have had some mixed results, especially if the volatility wasn't there. It would have had good results as well, but after seeing the early success from the CF10R, I wasn't going to continue to trade and give back some of the profits I had made. So I was calling it pretty early this week, and the reason being is because after seeing what happened last week, after seeing what's happened in the preceding weeks of being up and then continuing and ending up down on the day, I decided that it's going to be, if I get in, get to a reasonable goal. I'm not going to set a goal on the day. If I get to a reasonable amount, I'm just going to walk away, even if it means shorter videos. And that was a plan coming into this week here. And so far it's been working pretty well, especially in comparison to the data we've had from last week. So I don't believe this week we've actually taken any opportunities around the lunchtime period. Normally I am finished by then. So these were pretty much the steps that we took. So it was a losing week. We decided that we're going to move away from just getting in at random points, and we're going to focus on the open, especially after looking at the data. So without doing a weekly review, I was just looking at the just what happened overall on the days, looking at the reviews, rewatching the videos, and I saw that, you know, around that lunchtime, without even looking at the data, that I was having a difficult time during that period. So naturally decided to move away, had a change in strategy. Also, I thought about how to best trade that difficult period. And now it may not be the wisest decision, I'll admit, but I looked at it and I thought, well, what if I was to look at a range bound strategy to add to the overall strategy skill set? And that's pretty much what the strategy that I call 6F is. And 6F is our range bound strategy. Our CF10R is our momentum strategy. So I've got two strategies I'm using. I've pretty much moved away from the moving average cross at the minute. I'm focusing on just those two, so the 6F and the CF10R. And the goal is for the coming week is to primarily use those two strategies and see what the outcomes are going to be. Again, looking to have shorter days, get the goal, get out, shorter videos, not trying to overstay my welcome, not trying to overtrade. And so that's what we're looking to do in the coming week, and especially we're definitely going to be avoiding momentum strategy around the lunchtime period, especially after 10 a.m. Eastern, well, not 10 a.m., after 11 a.m. Eastern Standard Time. Looking to avoid momentum strategy due to market consolidation. During that time, if I'm going to use a strategy at all, if I'm going to even trade, I'm going to be using the 6F strategy because it's more adapted to a range bound market. Again, it could encounter some difficulties, but that's its primary purpose, a range bound market where the market isn't really trending, where it's a bit more controlled in the movements up and down. So looking to look at buys and shorts. Now there are some difficulties I can easily foresee. There are going to be periods where I'm going to go into drawdown due to the reduced accuracy, but the strategy is going to have the best risk reward of any strategy I've ever used. This range bound strategy is going to have the best risk reward of any strategy. I just had to say it again to emphasize it, that I have ever used. And based on what I've seen looking at the past data, it does seem to have positive outcomes over time. We'll see as we do use it, but it does seem to have positive outcomes. And that pretty much just summarize the weekly review here. So again, it was a negative week. I can see here 1, 2, 3, 4, 5. Was that 6? Did we take a trade on Sunday? Oh, I think we did take a trade on Sunday. Yeah, we took a trade at the market open. Yeah, we did take a trade at the market open. The market gapped. Did take a trade. Had a couple of winners, couple of losers. As we can see here on Thursday, giving back most of the gains with the big loss, and on Friday making back some of those losses that we did have here on the market. So Thursdays, I think Thursdays is a fairly difficult day for me, so I've got to pay particular attention around Thursdays, similar to how I pay attention to the time of day around lunchtime Eastern Standard Time. So I'm going to have to pay attention to Thursdays. There seems to be a market shift on a Thursday that I'm having difficulties adjusting to, so it's definitely something I'm going to have to keep in the back of my mind. And that's going to wrap up this weekly summary video. So probably looking to see if the improvements using CF10R and 6F, see what improvements bring for the next weekly review, whether we'll have a positive outcome or whether we'll still continue to learn, let's put it that way. Alright, thanks for watching.